If you are thinking about buying Ulti and you want to know what someone else's experience has been like owning it, then this video is for you because today I'm going to share with you guys how much I've made, how much I've lost, how long I've owned it for, how much I've put in, all the details about Ulti from someone who's owned it for a little bit over 2 months, but also from someone who has been looking at it for over 2 months every single day. So let's go for a walk and talk about Ulti. So first, how long have I held Ulti for? I've had it for 2 full months and some change. I bought it in late July and held it for August, September, and I'm still holding it as I record at the beginning of October. How much have I lost just in price? Well, $3,712. And what is that in percentage terms? That is about 13.88%. So I invested about 27,000 in Ulti, and if I were to sell it now, I'd lose $3,712. Down 13.88%, roughly 14%. Now the big question, how much have I got in dividends? Well, that number is $4,623 in dividends weekly. And the average weekly dividend has been $385. Now, what yield is that? Not annualized, not like the 85, 87% they put on their website, but how much have I actually got in yield? 17%. So you take the 4,623, divide it by the roughly 27,000, it equals 17%. So what is my total return for holding Ulti? Because total return is what matters. Well, I'm down 14% in price and up 17% in dividends. So if you do the math, I'm up about 3%. Now, the nice thing about that is dividends are not taxed yet, because remember, the dividends are mostly treated as return of capital, even though they're not. The dividends come from the options income. And if you want to see how that options income is generated, I've got some videos on my channel that explain exactly how they do that. So how do I feel about that? Well, the price has gone down quite a bit since I bought it, and no one likes to see that. But the weekly distributions are offsetting the price decline. There were weeks when my total return was negative. In fact, it could go negative next week if the price declines even further. I'm okay with that right now because I appreciate the weekly distributions. So what do I like about Ulti? Well, the big thing right now for me is that the income, the weekly distributions are consistent. You know roughly what to expect, kind of between that 8.5 cents to 10-cent range, and they're paid weekly. And compare that to a rental property where if the tenant does not pay the rent on time, you have to go through this whole process of trying to collect it, trying to get the rent that you're owed. And with Ulti, it's different. You can trust the YieldMax managers to make the options trades, generate premium, distribute that income to you on a consistent basis, a consistent weekly basis. So that's one thing I like about Ulti, is that as an income product, it's very good. It pays you a high income and it does it weekly, and they're consistent about it. As a price appreciation product, it's not been so good. But that's where you have to kind of do the total return math and say, all right, am I happy with the price declining on some weeks and rising on others, and also getting that income? If your focus is tax efficient income, more than just the 4% you get with SCHD, the Schwab fund, or the 8 to 10% you get with JEPI, the JP Morgan fund, then I prefer Ulti. Personally, I prefer taking more risk to get more income reward, and I do that, and that's why I'm owning Ulti. Now, one thing I also really like about Ulti is the active management. I know that passive management is very popular. Index funds are very popular. I own a lot of those as well, but I like the active management of Ulti because it means there are actual human beings behind every trade. Now, they're probably using some logic, some rules-based trading systems, but you get actual human beings, real traders, making the trades, making the decisions, or influencing them. And they're thinking about okay, how do we generate income, but also not have our price decline too much? What stocks are going to have the premiums that we want in their options trades? And of those stocks, which ones would be good fits for the portfolio that aren't just going to tank? And yeah, they're going to make mistakes. The Ulti traders are going to make mistakes. I think as long as their wins are greater than their losses, I'm okay with that. I don't expect every single Ulti options trade to be profitable. Some of them will probably blow up in their face. Others will do very well. A lot of it has to do with how the market is doing. Ulti is a bullish fund. It's covered calls where you want to see the stock appreciate, collect that premium, and if the stock goes through your strike price, yeah, you'll lose on some of the upside gain. You still collect some upside and the options premium. So what do I not like about Ulti? Well, I think it would be cool if they added more stocks to the portfolio. I know 20 to 23 is a lot, especially a lot to manage, but diversifying even more, just so that some of the returns aren't all concentrated in a few stocks. Because we saw that in September, where the quantum stocks, Rigetti, IonQ, or the nuclear stocks like NuScale or Oklo, those were driving a lot of the returns. So having all your returns being driven from 4 stocks is risky. I would think it would be cool if Ulti added more to their portfolio. See the apple orchards behind me. So yeah, that's one thing I don't quite like, is that the portfolio is kind of small. The other thing is some of the stocks are super risky. And I know that you need risky stocks to generate options premium, but I think with more stocks in the portfolio, I'd be more comfortable with some of the riskier stocks. And I think you could settle for even a little bit less options income and get a little bit more safety in the price of some of these. Just some thoughts. Is Ulti going to go to zero? No, I don't think they will. And the reason for that is, if you look at the underlying holdings, 20% is in cash. They keep cash and they keep money market funds, 20%. So if the stock is priced at $5, $1 of that is pure cash. Cash cannot go to zero in price. Inflation can erode the purchasing power of cash, for sure, but 20% of the portfolio is in cash. Stocks can all go to zero. Cash can't go to zero. So yeah, Ulti could drop. All the stocks in the Ulti portfolio could drop to zero. They'd still have that cash. Is Ulti only good in a bull market? That's an interesting question. I'd say no, because there's this saying somewhere out there that in a depression, he who loses least wins. So if everyone's down in their portfolios, but you're down the least, you're kind of winning. And that's where Ulti's strengths come in, which is the downside protection. Remember, they buy puts. They buy puts which protect them from further decline of the stock. So is Ulti only good in a bull market? It's not only good in a bull market. It has protection in bear markets. What stocks do I like in the Ulti portfolio? I wrote 4 down here: MicroStrategy, Coinbase, Robinhood, and Rocket companies, not Rocket Lab. Not that I have anything against Rocket Lab, but I think MicroStrategy because of the Bitcoin play. I think Coinbase because it's a fintech, it's an exchange. So there's definitely crypto exposure. Robinhood especially, just because they're doing really cool things over at Robinhood. Not only are they, a brokerage, but they're going to have a Twitter-like platform on the app where you can tweet about your stocks, and you have to show proof that you actually own it or that you made the trade. That's cool. They also have prediction markets now, like you can bet on sports or you can wager, whatever they want to call it, whatever term. It's basically sports betting in Robinhood. So that's cool. I also like Rocket companies because it's diversified. It's not crypto. It's not fintech. It's not quantum computing or some of the other things. It's just a different holding for Ulti. Is Ulti only for those people seeking income? This is where I'm going to give you a hard answer, and that's, I think, yes. I don't think I don't think it makes sense to buy Ulti, reinvest, and then just hope that that growth is compounding and you end up with a huge position of it. I think there are other ways to get growth from your stocks. And the reason I say that is because Ulti's price can definitely decline. Not that other stocks can't, but we've seen that the Ulti price has declined. That's just been the history of it. And so on a total return basis, growth stocks are probably better for growth. But for me, I was looking for an ETF that produced a lot of income and did it in a tax efficient manner and did it weekly. Actually, I didn't even know I was searching for a weekly payer. I didn't know ETFs could pay weekly distributions until I found Ulti. And that was amazing. I knew there were ones that paid monthly, but weekly is awesome. So as a supplement to your W-2 income or your rental income, whatever it is, I like Ulti. And that's why I bought it, for the income, not necessarily for the growth. My number one fear about Ulti are bad trades. And what I mean by that is, let's say Ulti is worth $10 and $2 of that is cash, $8 of that are the stocks that they own. Let's say they only own one, which is Opendoor. And let's say Opendoor remains flat and they generated $1 of income from options premiums. So the price of Ulti would be $11 because the Opendoor remained flat at $8. They generated $1 of income and their cash remained the same at $2. Great, fantastic. We got our income and we own the stock and we still have our cash. But let's say the trade goes against them and Opendoor goes from $8 to $6 a share. So they lose $2, but they offset that with the options income, which was $1. So they really only lose $1, but they may have had to have sold Opendoor when they had that protective put in place. And so that means they're generating income, but they're also taking stock losses, which you don't want to see. Ideally, if Opendoor goes down, they just keep writing covered calls to generate income until they get back to zero. Because if they start selling the stock, that's when they're going to lose money. They're going to have less money than they started with, even when you account for the options income. And that's not necessarily NAV erosion. That's just losing money on trades. So that is something that kind of worries me, is if they had a few of those trades and the options premiums are just not enough to offset the losses from selling the stocks at a loss. But that's why I look at the portfolio every single day and try to understand what's going on so I can be more comfortable with my Ulti holding. So that's my experience with Ulti. Thanks for coming along on this walk with me. Makes it much more enjoyable to get these thoughts out of my head and share them with you guys. Again, it's not a recommendation. My worst fear is that some retired person goes out and buys it and it doesn't work out and they lose their retirement savings. Like, that would be horrible. That's why I don't recommend it, because it's risky. So as always, do your own research, make your own decisions, but get the best information you can so that you can make a smart decision. Thanks for watching, guys, and see you in the next video.